how to return a yield using DeFi on Solana with Orca. Click on the link, orca.so. This takes us to Orca, come over to the left hand side and just click on Liquidity. Do you remember in the previous tutorial when we used Jupiter? We could swap between tokens like Sol and USDC, and it goes through different providers, like here it's Liquidity and Orca. There's also a fee, and the fee is generated by people that put their tokens into these liquidity pools. And you can see this pool got 0.137% in the last 24 hours. This one over here, 0.466. Now my name is Seb Monty and I'm trying to get you from zero to hero on the Solana blockchain. I've created tutorials on DeFi for numerous blockchains. In fact, I've done over 100 videos just on DeFi. And I've got a couple of views. Firstly, I think with DeFi it's easier to try before learning all the theory. So we'll try today and learn the theory in the next video. Also, when I say try, I'm referring to like a small amount of crypto. And I do want you to follow along. So let's go ahead together and open our Phantom wallets. Pause the video between each step if you need to. Now firstly, to the hamburger menu. I want to make sure that you have different wallets for different things. This is tutorial, I've got DeFi, staking, we'll cover this in a future video, NFTs, degen, this is for meme coins that could go parabolic. We've got some junk here. This is for another video on Orca. So if you need an extra wallet, remember you just go add connect wallet, create a new account, name it DeFi, and then just create. Now that we're in our DeFi wallet, we'll connect, and we're good to go. There are many different pools. Some of them get no rewards like this one other than trading fees, while other ones get a token reward. Marinated rewards are related to MSOL, Orca rewards are of course related to Orca, and so on and so on. So let's look at these two here. I want to do Sol and USDC. This has a higher yield and a lower fee rate. There's a significant amount of volume that's gone through. It hasn't generated as much in the way of fees, but it does get $174 each week of Orca tokens. And that gets split amongst the liquidity depending on how many times it's been traded. You can go for this one or this one. This one has a higher fee, so you'll capture more USDC and Sol, but this one's earning about 3 times as much. So let's try out this one. We'll click on deposit. And we've got 3 options. Custom is too advanced for this video, so we've got passive and active. We're most likely going to go with active, but I'll show you quickly passive. This means if we provide Sol and USDC, as long as Sol remains between $13 and $35, it can be traded. This will have lower yields and divergent loss. Divergence loss occurs when a deposit becomes unbalanced and you end up with a lower net value than you would have. Divergence loss is always a risk, so our goal is to earn more from trading fees than what the divergence loss would be, but we have no way of guaranteeing this. Here is a quick example. Let's say we have $50 worth of Sol, so that will be 2 Sol tokens. And then let's say we have $50 worth of USDC, and we put these all into a liquidity pool. Now if the price of Solana goes up, it's currently on $25, and it goes up to say $50, we might decide to withdraw our liquidity from the pool. When we go to withdraw, all of a sudden we now may only have 1 Sol token, because a lot of people have been buying Sol and giving us USDC. So now we have 1 Sol token worth $50, and then we may have $80 worth of USDC. So the combined value there is $130. Whereas if we just held the tokens and didn't provide liquidity, and we would have had $50 worth of USDC. Therefore, we would have $150 in total. And that's what divergence loss is. It also goes by another name, impermanent loss. We'll cover that again, but nothing beats experience here. You'll see that it says less frequent rebalancing, and this one requires frequent rebalancing. This will earn more trading fees, but we can go out of the range quite easily. This range is a lot bigger, but it earns a lot less in fees. I'll show you how much less. Choose amount. I'm just going to go with max. So this would be $227 worth. We can see our daily yield would be 0.084%. It's quite low. Now let's click on active. We'll go max again. This is less money going in, but the daily yield is a lot higher. So that's a major difference here. So for this example, I'm going to do a small amount. So if you decide to do the same, you're at least going with a small amount and learning the ropes. Preview and confirm deposit and approve. Deposit's completed and we now have an NFT in our wallet. If we go up to our Phantom wallet, have a look at our NFTs, we can see we've got this here. We can transfer it to another wallet and then we can redeem the crypto inside of it if we want to. It just represents the Orca whirlpool position. It says very clearly do not burn, and that's because there is an option to burn NFTs, but we definitely do not want to do that. If we burn it, the crypto's gone and that's the end of it. So that's how we add tokens into DeFi to hopefully earn trading rewards and a return. In the next video, I'll teach you a little bit more about DeFi in general, and we'll head over to DeFi Llama. So go watch that video now. Stay curious and catch you in the next video.